Welcome to the Deep Dive, where we take your sources and unpack the most important insight, giving you a shortcut to being well-informed. And this deep dive is a little unique. We're starting by looking at where this material actually comes from. It's created by EasyPathUni by Cordations, specifically with Yazan Ibrahim. And when you look at Yazan's background, it's pretty impressive. We're talking extensive professional experience here, head of internal audit for a financial department. That gives a real, practical perspective. Plus, that experience is backed by a whole suite of certifications, things like CISA, CFE.
Audit and fraud examination.
Right. And GRCP, GRCA, governance, risk, IPPA, FMVA, CBCA, B8A. It really covers the bases: audit, risk management, financial analysis.
It shows a really deep competence across the board.
Exactly. And all built on a solid education. It's clear this expertise is why they can tackle complex financial topics so well. So, the material you've shared digs deep into a cornerstone of financial strategy: asset and liability management, or ALM. Our mission today, to really explore the intricacies of ALM, understand its critical parts, and figure out why mastering it is so key for any organization's financial health.
Yeah, and what's really interesting is how the material takes these complex areas and boils them down into a clear, actionable framework. We'll be looking at how managing assets and liabilities, well, it's much more than just balancing the books. It's really about strategic resource allocation and, importantly, mitigating significant risks.
Okay, let's unpack that central concept then. Asset and liability management. The material defines it as strategically allocating resources, the goal, to optimize the company's financial position and meet its operational needs. It specifically breaks down assets. These are the economic resources owned or controlled by the company. Things like, cash, accounts receivable, inventory, property, the usual suspects.
The things that have value. And then on the flip side, you've got liabilities. These are the company's obligations. So we're talking loans, accounts payable, accrued expenses, that kind of thing. And connecting this to the bigger picture, the material really stresses that effectively managing both sides. Well, that's absolutely essential for maintaining financial stability, liquidity, and, long-term viability. Which does raise an important question. Why do so many organizations seem to struggle to get this balance right? It sounds crucial.
It really is. And the sources highlight that asset management isn't just about having assets. It involves these really crucial decisions about how to allocate and use those resources. How do you generate the maximum return? This means optimizing the mix. Short-term versus long-term assets, making informed investment decisions, and just ensuring efficient utilization, making your assets work for you. The material also emphasizes that strategic asset management, it has to align with the organization's goals and its tolerance for risk. The ultimate aim is value creation and sustainable growth.
And what's fascinating there, I think, is the constant need for regular monitoring, evaluating asset performance. This isn't a one-and-done kind of thing. You set a strategy, but then you have to keep adjusting it. Adapting based on changing market conditions, internal dynamics. It's about enhancing profitability and ensuring liquidity constantly.
Okay, so that's the asset side. Let's move to the other side of the equation, liability management. This focuses on strategically handling the company's obligations, again, to ensure financial health. So this includes decisions about, say, debt structure. What kind of debt do you take on? What about interest rates? Repayment terms. These are big decisions. And the material points out that effective liability management, it helps minimize financial risks. Things like interest rate fluctuations, which can really hurt if you're not prepared. And fundamentally, it ensures the company can actually meet its financial obligations when they're due. Pay the bills, basically.
Which brings up another key question, doesn't it? How does a company figure out the optimal balance between short-term and long-term debt? It's not simple. The material suggests it involves considering the company's whole capital structure and negotiating favorable terms with creditors. That's crucial. It's all about maintaining stability, but also flexibility. You need both.
So putting it all together, how do assets and liabilities work in tandem? The sources strongly emphasize this symbiotic relationship. They really depend on each other. Strategic asset management generates income and value, right?
Okay.
And that income and value can then be used to service the liabilities, pay down the debt. Conversely, effective liability and debt management, that provides the financial stability and flexibility that you absolutely need for optimal asset utilization. So you can make the most of what you own.
Exactly. The alignment of these two functions is just critical for a healthy financial position. And what's really fascinating here is how the material discusses liquidity. Liquidity being, the ability to meet those short-term obligations. Can you pay your immediate bills? So liquidity management is all about ensuring a company has enough cash or assets you can convert to cash easily to cover those immediate financial needs.
So avoiding cash flow problems.
Precisely. Striking the right balance between liquid assets, cash, mostly, and longer-term investments is just crucial. You don't want to be caught short. And the sources even give specific tools for this. They mention liquidity ratios.
Oh, yeah. Like what?
Like the current ratio or the quick ratio. These help you assess quantitatively the ability to meet short-term obligations. It helps organizations make informed decisions about managing both assets and liabilities day to day.
Makes sense. Okay, one more crucial piece the material highlights. Risk management. Makes it really clear that this isn't some separate function. It's integral, woven into ALM. Organizations face all sorts of risks, don't they? Market risk, credit risk, operational risk.
Absolutely. A whole spectrum.
And the point is, by actively identifying these risks, assessing them, and then crucially mitigating them, organizations safeguard their financial health. It's proactive defense.
Yeah, and if you connect this to the bigger picture, strategies like diversifying your assets, being careful about which investments you choose, managing debt prudently, these aren't just nice to haves. They are actively employed to minimize your exposure to potential risks.
So it's not just about avoiding problems, it's about constant vigilance.
Exactly. The material really stresses continuous monitoring, watching market conditions, interest rates, economic factors, anything that might impact your portfolios. You have to stay alert.
So wrapping this all up, what does this really mean for you, the listener? Our deep dive into this material from EasyPathUni and Yazan Ibrahim makes it crystal clear. Effective management of assets and liabilities, well, it truly is a cornerstone of successful financial management. It's fundamental. It boils down to strategic choices, resource allocation, investment decisions, debt management, all aimed at achieving stability, ensuring liquidity, and securing long-term sustainability.
Which leads us to a final important question for you to think about. In a world that's constantly changing, with economic shifts happening all the time, how might that delicate balance, the balance between pursuing aggressive asset growth on one hand and maintaining prudent liability management on the other, how might that be the ultimate test of a company's leadership and its foresight? Something to really mull over.
That's it for this deep dive. We really hope this has given you some powerful insights to consider as you navigate the complexities of financial strategy. Until next time.